to the very first webinar of this year's Fair Tax Week, UK Public Attitudes to Corporate Tax Conduct, why businesses should consider the Fair Tax Mark. I'm Tom Skinner. I'm the COO of the Fair Tax Foundation. I'll be sharing today. This event is one of many organised for Fair Tax Week this year. We're running from the 8th to the 18th of June, and it's an initiative by the Fair Tax Foundation that recognises the businesses and organisations that are proud to promote responsible tax conduct. It's also a celebration of the positive contribution this makes to society and the huge array of public services that it helps to fund, from education to health, to social care, to flood defence, roads and policing. To find out more about Fair Tax Week and what else is happening, please see fairtaxmark.net. So on to today's webinar. We've been running polls of the UK public for the last 7 years. And in this webinar, we're going to look at the highlights and the trends from these polls and a brand new report for this year that brings together the data and findings across that period about the UK public's attitudes to corporate tax conduct. After our two speakers today, we're going to have a time of questions and answers. Please do post your questions anytime while presentations are ongoing. Use the Q&A button, and these questions will be picked up at the end of the whole webinar. So our speakers today are Penny Hogan, who is the Financial Controller of Unity Trust Bank. Unity Trust Bank have sponsored this report and this webinar. They are, of course, a Fair Tax Mark accredited business. But first, we're going to hear from Graham Drummond. Graham is Head of Communications at the Fair Tax Foundation, with a wealth of communications experience from a career in the third sector, leading on national awareness campaigns and behaviour change projects. Graham is also leading on Fair Tax Week here too. He seems to be holding up okay so far, but we're checking in again at the end of the week. And Graham's going to be talking about our public polling and our report. So over to you, Graham.
Thanks, Tom. Let me just share my screen. Yeah, thank you for everyone joining us today. As a bit of background, we've been asking the public same questions since 2017 and tracking these responses. And this special report that we've released yesterday, Fair Tax Nation, pulls all of this data together to give a really rounded view on what the UK public think about corporate tax related issues over a pretty significant span of time. So just a bit of background, we use a polling company and our data is from a nationally representative sample of around 2,000 adults across Great Britain. So I'll be going through most of the report today and the findings that are within it, but there are some things I won't have time to go into. It's 13 pages long, so it's quite substantial. You can find the full report on our website, fairtaxmark.net. It's under latest news. Or if you go to our Twitter, @FairTaxMark, you'll find it pinned at the top of there. So just before I jump into our data, I thought I'd show it's not just ours that shows concern around corporate tax conduct. Previously, the Institute of Business Ethics has roundly demonstrated that corporate tax avoidance is one of the UK's #1 concerns when it comes to corporate tax conduct. Now, this isn't just a one-off and 1 year. This has actually been the case as of last year for 10 consecutive years. And last year, the disquiet was at the highest it's ever been through this question, with 47% of people citing it among their top 3 concerns when questioned in this annual survey. It's also noteworthy if you look at the second result there, bribery and corruption, that's now the second most cited concern for the first time in this 20 years of polling from IBE. Now, that's likely a consequence of the increased general awareness around the UK as a global hub, unfortunately, for dirty money and corruption, following Russia's invasion of Ukraine and the exposure of various connected kleptocrats and their ill-gotten illicit wealth. But let's start with the positive stuff. So here's what our survey has shown this year. And without going into the detail on every single year that we've been carrying this out, you can see from these graphs that the concerns across different questions are very high, consistently high. And that's the key thing. So in 2023, almost 3/4 of respondents, 73%, said that they believed it's important to celebrate businesses who can demonstrate they pay the right amount of tax and who overtly shun the artificial use of tax havens and contrived tax avoidance practices. In this question, and one thing you'll see across this report, which is really interesting, is the attitude depends on age, and it's the case for most responses. So while agreement's really positive across all these different ages, 85% of those 75 and older agree with this in 2023, compared to 61% of 18 to 24-year-olds. Now, this age discrepancy, we've seen this obviously for a little bit, and the reasons are unclear, but we have a few guesses. Factors might include, for example, older people being more reliant on public services, to which obviously corporation tax contributes to. Younger adults might have more exposure to the gig economy and also be more comfortable possibly with businesses linked to tax avoidance. There could just be a generational shift in values, but it's something that crops up time and again, which is it's a fascinating thing. So the vast majority of people in the UK, 70%, would rather shop with a business which can prove it's paying its fair share of tax. Now, when the public are pushed further and asked if they'd switch the business that they use in favour of one that has a fair tax mark, 50% of them agree. That's strong, it's half of all people, but it is the lower end of the support seen over the last 7 years, and it's likely influenced by the cost of living crisis that obviously many families across the UK currently find themselves embroiled in. The high levels of propensity towards ethical consumerism on the issue of corporate tax conduct stand out though, especially when you compare that to work in similar areas. So for example, Deloitte has conducted surveys into consumer attitudes and behaviours around sustainability. Now that found last year in 2022 that 40% of the UK public had chosen brands that have environmentally sustainable practices and or values, and that 37% had chosen brands that have ethical practices and values. So again, compares favourably. Similarly, in 2023, the vast majority of the UK public, 72%, would rather work for a business which can prove it's paying its fair share of tax. Now, again, this high level of preference towards working for a business, doing the right thing, contrasts with other ethical issues. Similarly, in 2020, a survey commissioned by Unily of UK office-based workers found that 65% said they were more likely to work for a firm that had strong environmental values. So tax concerns hold up well against other ethical concerns. Now, trust in the fair tax mark. A substantial majority, 62% of the UK public, would trust a business with the fair tax mark more than one without it. So as you can see from this graph on the screen, HMRC and fair tax mark accreditation are heavily favoured as trusted verifiers of good corporate tax conduct. Company auditors, untrusted by just 15% of the public. There might be some obvious reasons here. The latter's poor performance is no doubt influenced by the seemingly never-ending stories that continue to make headlines around scandals. And the UK's audit watchdog, the Financial Reporting Council, in 21 and 22 issued a record £46.5 million worth of fines for Britain's top accounting firms. So maybe no surprises there that this data correlates with that. One thing that is concerning is that trust in HMRC has been the lowest that it's been over 6 years of polling. And that's likely a consequence of the much publicised challenges that it's faced. And I'll talk a little bit more at the end when I kind of round up on that. But tax revenue directly attributable to HMRC compliance activity has fallen and equated to £9 billion less over the 2 years of 2020-21 and 21-22 compared with its performance before the pandemic. So that's really significant, and it leads to the conclusion that the government could be missing an opportunity to recover a lot of money by not properly resourcing HMRC's compliance activities. A Jerry Maguire moment, show me the money. In 2023, 3/4 of respondents, 75%, agreed that the UK should be taking a lead and force multinational businesses to disclose how much income, profit and tax they pay in each country that they operate. So support's particularly high amongst those who voted in the last general election. To give a quick political breakdown, in 2023, agreement was 80% among Conservative voters, 77% among Labour and Lib Dem voters, and 89% among SNP voters. So really a concern across the political spectrum. At present, the vast majority of multinationals that operate in the UK refuse to publicly disclose how much corporation tax they pay here or in any other country. And that means we don't really have a way of telling whether the likes of Amazon and Facebook are paying their fair share of taxes. So a breakdown of how much income, profit and tax is being generated is really needed. And that's referred to as public country by country reporting. And there's a small and growing number of responsible enterprises voluntarily embracing the need for this and saying what they pay with pride. And that includes fair tax mark accredited businesses. Public country by country reporting is probably the hottest topic in financial reporting right now. It's also the subject of an increasing number of investor resolutions, such as the annual general meetings of Amazon, Cisco, and Microsoft last year, and legislative requirements. This is something that's being advanced everywhere from Europe in the EU to Australia. And in 2016, actually, under all-party pressure from Parliament, the UK government agreed that public country-by-country reporting was merited and did accept an amendment to the finance bill. But to date, those powers haven't been enacted. And you know, this kind of data shows that it's now time for the UK to show leadership on this and really take action in this area. It's mandated by an overwhelming majority of voters. In 2023, 3/4 of respondents, 76%, agreed that all companies, whatever their size, should have to publicly disclose the taxes they do or don't pay in the UK. So in terms of small business transparency, at the moment, the vast majority of small companies in the UK avail themselves of the right to publish filleted and or abridged accounts at Companies House. In effect, the only financial information that's disclosed is a scaled down balance sheet account. There's no information on income, profit or taxes paid. Now that's not just legal, that's actually within the spirit of the law as it stands. But tax avoidance isn't something that's just exploited by big multinationals. If anything, there's evidence to suggest that the cumulative impact of tax dodging by small business is greater than that by big business. For example, the UK's tax gap analysis, which was most recently presented by HMRC in 2022, suggests that small business is responsible for 2/3, 66% of the UK's corporate tax gap. So the government should be commended for the proposals set out in the Economic Crime and Corporate Transparency Bill that would lead to small companies having to file a profit and loss account and a director's report, micro entities having to file profit and loss account, and would also lead to removal of the option to file abridged accounts. This will reduce fraud and allow creditors, suppliers and consumers to make more informed decisions. And it also helps the UK markets operate more optimally. So let's talk about procurement for a minute. Almost 2/3 of respondents agreed that the government and local councils should consider a company's ethics and how they pay their tax, as well as value for money and quality of service. There are new public procurement rules that are being advanced by the UK government, and they're really significant. They encompass every town and city, national bodies, the NHS, and they have a combined value of over £300 billion per annum. So there's a massive opportunity here for taxpayer spend to finally embed tax justice and for it to further embed social value. On the downside, this procurement bill unfortunately does very little meaningfully to allow progressive towns and cities to factor in the tax conduct of the companies supplying them. There are some positive aspects in the proposed reforms, not least the intention that overseas suppliers will have to have their beneficial ownership publicly disclosed, which UK companies are already required to. But it's really important that we never have this ridiculous situation again when the Russian invasion began, of progressive towns and cities feeling like they couldn't exclude Gazprom from procurement, for example. At the Fair Tax Foundation, we engage with politicians from all political persuasions not least because many of the Fair Tax Council resolutions that have been passed across the UK have enjoyed all party support. And we commend the recent policy proposals of the Labour Party, which would reward suppliers that demonstrate a robust commitment to responsible tax conduct and financial transparency. Now, this response is probably the most prominent response we've had in these questions. Over 80% of respondents agreed that all businesses benefiting from government bailout should have to agree to a set of conditions that prohibit tax avoidance and enforce responsible tax conduct. That's the highest level of support seen from any statement now polling. It's also the highest age gap, going back to what I was saying earlier about older people tending to agree more with these questions. 97% of 75 and older agreed with this versus just 59% of 18 to 24-year-olds in 2023. So a huge age variation there. But it is worth noting that the younger people who didn't agree with this didn't actually move to disagree. They fell into neither agree or disagree. So just to round this up a little bit, it's really clear that tax justice is a top concern for the UK public. I think we could all fairly say that the UK is a fair tax nation when it comes to the public and individuals, and the vast majority of them want the government to do more to ensure that all businesses, large and small, pay their fair share. And there's a desire for legislative change there as well. People want multinational businesses to disclose how much income, profit and tax they make across jurisdictions. They want small businesses to publicly disclose the taxes they do or don't pay in the UK. They want those benefiting from government bailouts to have to agree to a set of conditions that would enforce them to behave responsibly when it comes to tax conduct. And with public procurement, tenders, whether they're national or local, should consider companies' ethics and how they pay their tax, as well as the value for money and quality of service. I think really positively, certainly at the start of Fair Tax Week, when a lot of businesses are celebrating this week, the research shows the UK public really value shopping and working with businesses that do demonstrate responsible tax conduct. Support are at levels, as I said, that compare favourably with other ethical issues. And there's a strong desire to celebrate the businesses that are doing the right thing on tax and who aren't using artificially using tax havens or aggressive tax avoidance. So that's something really positive to celebrate. Again, worryingly though, there is this potential area of concern that shows that trust in HMRC is the lowest it's been that we've seen in our polling. Now, it's worrying as well because there's a significant correlation between tax morale and tax compliance in both developing and developed countries. So if you're more likely to pay your taxes if you think that everyone else is. And unfortunately, on the flip side, if you feel like people aren't, you're more likely to try and dodge taxes. And the UK system relies largely on voluntary tax compliance. Now, obviously, many challenges publicised around HMRC recently. Staff were redeployed to work on Brexit and COVID schemes, and they opened fewer tax inquiries and prosecuted far fewer people during the pandemic. But they do excellent work, and it's really important that they are resourced properly. For every £1 HMRC spent on compliance activities, they bring in £18, recover £18 in additional tax revenue. So the UK government should be changing things to make sure that they can recover billions of lost revenue and ensure that trust in HMRC is rock solid. And just to finish, considering the level of concern amongst the UK public, this will be music to the ears of our fair tax mark accredited businesses who are HQ'd in the UK, who can demonstrate independently that they're doing the right thing on tax. And it's not just helpful for their customers and employees, as we saw, there's so many other stakeholders who value this. Investors, for example, who are taking a greater interest in tax conduct as a risk and an ESG consideration. It's a way to get positive public attention, get ahead of the curve of new regulation, and ultimately fair tax mark businesses are playing a part in shaping the landscape towards a fairer future. As we saw earlier, it's second only to HMRC in terms of trusted source. Majority of people would trust a business more for having a fair tax mark, and it's more than over 3 times more trustworthy than a business just saying they do the right thing, which, we've all seen what's happened recently with greenwashing. It's important to have verification. At the moment, around 100 parent companies are fair tax mark accredited, and there are 250 distinct trading businesses within that. Between them, over 250,000 of employees and contributing more than £1 billion annually in corporation tax. So a real impact there. We have a whole variety of accredited businesses, from listed PLCs, co-ops, social enterprises, large private businesses. And following our global expansion at the end of 2021, we also now have businesses in Denmark, Italy, Germany, Sweden, the Netherlands. So brilliant stuff for Fair Tax Week. And you can see just a handful of the businesses there. And now you'll be hearing from one of them, Unity Trust Bank, who are actually one of the very first businesses to gain the Fair Tax mark and first bank in the UK to do so. So I'll hand back to Tom to introduce Penny. Cheers.
Thank you very much, Graham. It's really striking to hear, I think, that corporate tax avoidance has topped the UK public concerns about corporate conduct for the last 10 years, and really fascinating to me to see in the Fair Tax Foundation's polling a breakdown of how these attitudes take shape. Just a reminder to everyone that you can post your questions at any time using the Q&A button. It's most likely found in the ribbon at the bottom of the screen if you have your mouse over there, but it might be somewhere else for you. But yeah, keep those questions coming in. So over to Penny. Penny Hogan is the financial controller of Unity Trust Bank. Again, many thanks to Unity for sponsoring this report that Graham's been talking about and this webinar itself. Penny has over 20 years experience auditing and working for banks. In the last 10 years, she has worked solely for ethic proposition-led banks. She is extensively involved in implementing the Cooperative Bank's turnaround plan to help bring the bank back to a profitable position. Congratulations. Before moving to Unity Trust Bank 2 years ago. And Penny's going to be talking about the bank's experience as a fair tax mark accredited businesses and why they are the benefits, and more broadly about what the bank does as well. So over to you, Penny.
Hi, good afternoon. Can everybody hear me okay? Yeah, and can you see my slides? That's fantastic. So good afternoon, everybody, and thank you very much for the introduction, Tom. First of all, I'd like to thank the Fair Tax Foundation for inviting me to speak today. I really am thrilled to be part of the event. Today, I'll be delivering a short presentation on Unity Trust Bank's purpose and the work as a responsible lender, why Unity applied for the Fair Tax mark, and also the benefits of the Fair Tax mark. First of all, I'd actually like to explain why the fair tax movement resonates strongly with my own personal values. May I take you back to when I was 21? I'd just left university. I threw my peddler's sack over my shoulder and I set off to make my way in the world. I chose to go and live and work in various jurisdictions which some refer to as tax havens. Through working as an auditor, I helped shelter the income and gains of the richest people in society from the reaches of the UK inland revenue. I also benefited personally from the lower income tax regime whilst working in these jurisdictions. When I moved back to the UK, I started my family. So that in part led me to think hard about my career and the choices I'd made in my life. I then began working for an ethical proposition-led bank, which I felt really resonated with my renewed outlook on the world. I wanted to do the right thing. I think it's never too late to decide to do the right thing. And I worked for an ethical proposition-led bank for nearly 10 years, the last 2 at Unity Trust Bank. So next I'm going to talk about Unity Trust Bank and Unity's work as a proposition, as a responsible lender. Unity is a thriving commercial bank with a loan book of over 800 million, founded in 1984 to serve the common good and deliver sustainable returns. This purpose is in our article of association. It's the company's DNA. It's not simply a marketing point. Unity believes in delivering impact, not simply maximizing profits. Our mission is to help socially minded organizations to prosper and make a positive contribution to economic, social, and environmental needs in local communities. This mission demands that we act in the best interest of our customers, communities, society, and other stakeholders. We only provide banking services to organisations delivering demonstrable positive social impact, whether it be trade unions, care homes, faith groups, dentistry, social enterprise, etc. Through safe, sustainable growth, Unity Trust Bank supports organisations to deliver social and environmental impact in their communities, while also meeting their commercial needs as our customers. Strengthening our commitment to environmental, social and governance principles, Unity has aligned all lending activities to the United Nations Sustainable Development Goals since 2019. Unity's alignment to the SDGs provides a negative screening for lending to sectors that may directly cause social or environmental harm. Over 1,000 new organisations opened a bank with us in 2022, with over 30% of new accounts supporting people in areas of high deprivation. In 2022, we supported socially minded organisations with 224 million of lending committed to 154 customers across the UK, contributing to the United Nations SDGs. Our lending supported communities where it's needed the most. In 22, nearly half of our loans were made to organisations based in areas of high deprivation. Unity is committed to act to deliver social good in other ways, whether it be paying the living wage, volunteering, charitable fundraising, or paying our fair share of tax. Unity and Me, an employee-led initiative, was launched during 2022. Colleagues have set specific areas of delivering social and environmental impact, including supporting colleague well-being, volunteering and community engagement, charity partner management, and improving Unity sustainability performance. There's a very strong sense of community in the bank. 1,168 hours of colleague volunteering was delivered directly to communities in 2022, a 14% increase on 21. Moving to environmental sustainability, Unity has been carbon neutral since 2019, with verification and offsetting provided by Carbon Footprint Limited. The bank's loan portfolio and treasury investments do not contribute to global climate change via the production of fossil fuels, mining or heavy manufacturing. This means that we, unlike some other banking institutions, do not have any bad activities to stop doing. In 2022, Unity was the first financial institution to support the HACT Arctica Retrofit Credit Programme, directly improving the energy efficiency and quality of UK social housing to contribute to a just transition. The bank remains an active member of financing a Just Transition Alliance, formed to progress actions from the Paris Agreement on climate change. Unity also participates on impact thought leadership on a global scale. We were proud to be the newest UK member to join the Global Alliance for Banking with Values in 2022, a community of like-minded financial institutions committed to creating positive social impact. Our impact report is available on our website if you'd like to learn more about the good that we do. Next, I'm going to talk about why Unity applied for the Fair Tax Mark. We believe that the Fair Tax Foundation's goals are aligned to our own through promoting just and transparent tax. Tax contributions are a key part of the positive social and economic impact made by businesses. Without tax, it'd be impossible to pay for the country's social services, schools, health services, defence, and the move to net zero. We play our part in delivering the social impact by our commitment to paying the appropriate taxes that reflect the economic reality of transactions we undertake in our business. Other ways tax enable positive social impact is through government tax schemes and permitted deductions such as research and development spend. Unity participates in the Community Investment Tax Relief Scheme, which encourages investment in disadvantaged communities by giving tax relief to companies who invest in community development finance institutions. This tax relief enables organisations to access funding that ordinarily might find it difficult or even impossible to do so. Last year, we supported over 100 organisations by providing access to funding through the assistance of the scheme. Our commitment to paying our fair share of tax and providing transparent disclosures is formalised via our tax strategy, which is published on our website. Unity's tax strategy sets out that paying our fair share of tax means paying tax in accordance with the spirit of all tax laws that apply to our business, and also paying tax and making transparent disclosures in this way is a clear indication of being responsible participants in society. In terms of benefits of the Fair Tax Mark, tax transparency is an enabler for social good. Our disclosures enable us to dispel any myths about any aggressive tax practice, and also give us the opportunity to disclose the social good delivered via the Community Development Finance Institution Scheme and how we remunerate our employees. This is important for our current and potential future stakeholders who are equally as focused as we are in delivering social good. The Fair Tax Mark helps us to instill pride in our employees and increase customer confidence. It provides assurance to investors that we are an exemplar and managing tax-related risks well. It helps us win positive public and media attention for our commitment, boosting our brand via enhanced CSR and ESG credentials. The Fair Tax Marks provide a framework to bench against, both in practices and disclosures, for continual improvement and enhancement. The Fair Tax Mark provides independent evidence and assurance to our stakeholders that we are not acting in a way that is contradictory to our mission to deliver social good. Finally, I'd like to thank the Fair Tax Foundation on behalf of Unity for their support over the last 10 years and helping us demonstrate the social good we enable through paying our fair share of tax. That concludes my presentation. Thank you very much for listening, and I'll pass back to Tom for Q&A.
Thank you very much, Penny. And it's great to hear about your own personal journey on this, as well as that of Unity Trust Banks. In terms of questions, let's see. I'm going to kick us off. Because so far it's looking like everyone's already had all their questions answered through the talks, which I think is always a really good sign. Graham, so we've seen how people look for responsible tax conduct when they're shopping, even who they'd work with, and that they see the Fair Tax Mark as a trusted verifier. We've heard from Penny about how that kind of, this is independent assurance kind of for their stakeholders is really important. So very simply, if companies want to become Fair Tax Mark accredited, how would they go about that, please?
Yeah, it's quick and straightforward. If they go to our website, fairtaxmark.net, there is a button there that says inquire now. There's a very short form to fill in, and we have a dedicated accreditation team who work alongside every business that we work with. It's the Fair Tax Mark isn't a kind of tick the checklist and you get your certificate type thing. It's a process, and our team guide each business through and help them to achieve the Fair Tax Mark. So if you click that button and fill in the form, and one of those will be back with you soon to discuss your Fair Tax Mark accreditation. And I will say as well, just as an aside, it's a very robust process, the Fair Tax Mark, but we do treat everything confidentially, of course. And our accreditation team has a wealth of expertise. They're really efficient, and they're a good bunch. So if you click that button, and one of them will be in touch with you soon.
Thank you, Graham. And we've just dropped the URL into that for the Fair Tax Foundation website there. Okay, we've got a couple of questions coming in now. I'll start with the one that relates directly to what Graham was just saying, which is roughly how long does the accreditation process take, please? To you again.
That's a really tough question. Obviously, one of the things with the Fair Tax Mark is that, and our work is that every business is completely different, and that's one of the amazing things about the Fair Tax Mark. We have such a variety of businesses, whether they're small businesses, multinationals, headquartered in different countries. So it's really hard to say. I think if you're looking at the multinational standard, you're probably looking at around 8 weeks for our team to kind of complete their preliminary report and for the next steps. Oftentimes, as I said, the team are really efficient. It's often just how quick can the company work with our team, and sometimes things have to go back up to board, for example, but the process isn't a lengthy, drawn out one if the business is willing to kind of roll with the recommendations and get things moving. We're always happy to work as fast as we can to add a business to our global community.
Thank you. And now there's a question. Somebody's living in an ethnically diverse area and is interested, has there been research into views of different cultures on tax avoidance?
I mean, there probably is research out there. I'm not sure per se kind of how much stuff we have. I would suggest looking around. I'm not sure about the actual breakdown between those, but I would all I could say is just to have a look around for that. We can always it might be that some of the team have something that they could point you to. Happy if you want to email me, Graham at fairtaxmark.net, and I can see if I can help with that. But to hand, nothing at the moment. But
thank you. Okay, a question here. Pension fund campaigners are lobbying on fossil-free investments. How can this tie in with pension funds, not investing in firms involved in tax avoidance? Penny, I don't know if you have experience looking around ESG, which is environmental, social, and governance, and investments around this, and then Graham too.
So for the sort of direct investment perspective, certainly we screen all treasury investments that we invest in from a harmful environmental perspective. So from a pension investment, it's part of the transition risk that all organisations in the UK will need to work through in terms of the move to net zero.
Thank you. And Graham, do you have any thoughts on the...
I was just going to say, actually, this person might be really interested in the webinar that we have next week on the 13th of June, which is all about ESG and why investors should have a responsible, robust approach, to tax conduct. So register for that one. That one looks really good. We've got speakers from Epworth Investment. It's chaired by ESG Clarity. We have Marshalls, FTSE listed businesses who are fair tax accredited, and UNPRI as well. So that would be one for that one probably.
Yeah, good answer. The answer is we will look at that in far more detail next week. Oh, good. And the link to that webinar is up now. So I'm not seeing any other questions. I've had mine answered as well, so I'm happy. Well, brilliant. Thank you so much for to our speakers, Penny and Graham. I think, again, it's so striking to see corporate tax avoidance topping UK public concerns for the last 10 years about corporate conduct. And to see that the public is consistently valuing companies who are engaging in responsible tax conduct and financial transparency. They'd rather shop with them, they'd rather work for them. They believe government support should be conditional on responsible tax conduct. And we're seeing that they're trusting the fair tax mark as a verifier of this conduct. These polls, inform our work so much to understand where everyone is coming from and what matters to the public. And that informs what matters to companies as well. So yeah, as Graham alluded to, we've got loads more coming up. The next Fair Tax Week event is on the 12th of June. It's What Makes a Tax Haven, featuring Guardian journalist Juliet Garside, award-winning author Oliver Bullough, and expert speakers from Oxfam, EU, and the Tax Justice Network. You can find details on fairtaxmark.net. Thank you again to our speakers, Penny and Graham, to our sponsor, Unity Trust Bank, and to all of you for attending and for your participation and some great questions. And yeah, we look forward to seeing you in future events.